Hey, we're going to get rolling here this week. We had some new contract highs that we saw on corn and beans here over the past few days, adding some weather premium. So we're just going to get right to it here right now. With new contract highs, you really got to go back and look at a monthly chart and see where we can potentially go towards, with front month above $8 in here. And you got new crop D's moving into new highs as well. I mean, you've got to go back to that 2012 where the market peaked out at 843 3/4. Just from a chart standpoint, that's the number you have to look at. Is there enough bullishness out there to keep this thing fueled higher? Is there enough outside money flowing in? Those are the big questions that we're facing right now in this market. Let's look at a D's corn chart here. And on that red horizontal line, that's the date going back to March 7th. And as you can see, from March 7th until today, you've had the D's corn futures in the U.S. up about $1.05 a bushel, or a 16% rally. We're using that specific date as we move ahead, and we want to look at new crop Chinese corn futures. And on that slide here in front of us, that red line is again from March 7th. And as you can see, that's gone up just over 51 per ton, or about a 2% rally in price. Now, with favorable crops in South America, we want to show you the Brazilian corn futures chart for new crop November, and that red horizontal line up on top from March 7th is the contract high, close up at 101.69. And when you look at this, you've seen Brazilian corn drop about 7% in value. So if you look at the U.S., you're saying this market's really bullish. You look at the Chinese market, we got to call it flat. You look at a Brazilian corn market in here right now, you would have to say that the trend is lower in here right now, just getting a little bit of a bounce back here the last couple of days that rallied back with the U.S. market. Now we're going to bring a June crude oil market or chart in front of us. Last week we visited on natural gas as that was hot. What's kind of ironic in here is that contract high on June crude oil that was established on March 7th as well. We just kind of went back to that date. That was the war rally in here right now, and it peaked out. What bothers us a little bit on this crude oil market is it seems it's telling us that the higher trend is a little bit vulnerable, and that the contract highs will probably hold with the war premium all in place. As we want to wrap up today, and I know this is a short weekly webinar, we'd like to just bring the points that we really view that catch our eye in the market. And that was one thing here this past week. Is the war trade really over with? You know, that can be debated. If you go back to last week and you look at natural gas, you're saying that's not the case. Natural gas did make new highs again in here this week. If you look at the crude oil market, you're saying yes, that the high's in place. If you look at wheat, you're saying the war rally's over with, but then you've dropped down to the next one here right now. Are we adding some weather premium into the market? If we are, wheat is leading because of the poor crop conditions. I believe it's the lowest in about 20 years. Corn had a weather rally in here right now, as well as we're trading a little bit of planting delays. Keep in mind, though, when we look back to 2012, the corn market did peak out before the drought rally was over with. We think one of the biggest question marks in here right now is, are we rationing demand? Okay, does $11, $12 wheat ration wheat demand? Does $7, $8 corn ration corn demand? What about $15, $16, $17 beans? Are we starting to see some demand rationing here? As we want to wrap it up, I think you just got to stay consistent in rewarding rallies. We like selling cash, budgeting dollars for puts. On the very bottom, I put on there the KISS principle, and this brings me back to my college years. And the two things that stuck out to me in college on what you need to do is, one is you need to network out, and number two is a KISS principle, and the KISS principle was to keep it simple, stupid. And as we present our webinars in here right now and on our daily advisory report, we admit to you that if we cannot keep our strategy simple enough for everyone to understand, we're the stupid ones, not you. We're trying to bring you some common sense marketing advice to help you protect your bottom line. If you have questions or concerns, feel free to drop us an email. Look forward to seeing you back here again next week. Have a great day.